Imagine waking up one morning to a letter from HMRC. Not the usual annual reminder. Something different. A penalty notice. A fine. Because you missed a deadline you did not even know existed. And the worst part? You had been doing your taxes correctly for years. You had done nothing wrong, except that the rules changed, and nobody told you. That is not a hypothetical. That is a real risk that hundreds of thousands of UK landlords and self-employed people are facing right now. And if you earn over £50,000 a year from property or self-employment, this video could be one of the most important things you watch in 2026. Welcome to NestPath UK. Today we are breaking down making tax digital. What it actually is, exactly who it affects, what happens if you ignore it, and step by step what you need to do right now to protect yourself. I am going to make this as clear and simple as possible, because the stakes are real and the confusion out there is enormous. Stay with me until the end. I promise every minute of this video is going to be useful to you. Let us start with the big picture. Making tax digital, or MTD, is the biggest shake-up of the UK tax return system in 30 years. That is not an exaggeration. That is what the experts are calling it. For decades, landlords and self-employed people have submitted one annual self-assessment tax return, usually in a mad January rush, gathering receipts, checking bank statements, doing it all in one sitting. That system is ending, and the new one is already here. From the 6th of April 2026, which has already passed, if you are a sole trader or landlord with qualifying income above £50,000, you are legally required to follow the new Making Tax Digital rules. No extension, no grace period for getting started. The clock has already started running. Now here is the number that should worry everyone watching this. Research suggests that only 30% of people affected by MTD are actually aware of it. That means 7 out of every 10 landlords and self-employed people who are legally required to comply right now, today, either do not know it exists, do not understand what it requires, or have simply not yet taken action. And HMRC knows this, which is why they have built a penalty system to deal with it. Let me explain what Making Tax Digital actually requires you to do. Because this is where people get confused and anxious, and honestly, once you understand it, it is less frightening than it sounds, but you do need to understand it completely. Under MTD for income tax self-assessment, that is the full official name, you are no longer allowed to submit one tax return a year. Instead, you must submit 4 quarterly updates throughout the year, plus a final end-of-year declaration. So 5 submissions in total instead of 1. Every quarter, you report your income and expenses digitally to HMRC using approved software. Then, at the end of the tax year, you submit your final declaration by the 31st of January, the same deadline as the current self-assessment system. The first quarterly deadline for the 2026 to 2027 tax year is the 7th of August 2026. That covers the period from the 6th of April to the 5th of July. After that, deadlines fall in November, February, and May. These are not suggestions. These are legal obligations, and missing them puts you into a points-based penalty system that ultimately leads to fines. Here is how the penalty system works. Pay close attention to this part because it matters. HMRC uses a points-based model. Every time you miss a quarterly submission deadline, you accumulate 1 penalty point. Once you reach a threshold, 4 points for those who are required to use MTD, an automatic fine of £200 is triggered. Points are valid for 2 years and can only be cleared after a 12-month period of full compliance after any fine is issued. On top of this, there is a separate one-off fine for anyone who fails to use compatible software to file their returns at all. And if a business fails to provide any records whatsoever, fines can reach £3,000. Now, there is some good news here, and I want to be fair about this because on NestPath UK we always give you the complete picture. HMRC has confirmed a soft landing period. For the first 12 months of MTD, the 2026 to 2027 tax year, penalty points will not be applied for late quarterly updates. You will still need to submit them, and you will still need to use compatible software. But if you miss a quarterly deadline in year 1, HMRC is not going to immediately penalize you. This is their acknowledgement that there will be teething problems. However, and this is critical, this grace period applies to quarterly updates only, not to your final end-of-year declaration. Miss that January 31st deadline and you are immediately in the standard penalty regime, grace period or not. So if you are in the first wave, income above £50,000 from self-employment or property in the 2024 to 2025 tax year, here is your situation right now. You needed to register for MTD before the 1st of April 2026. You are now required to keep digital records of all your income and expenses using HMRC compatible software, and your first quarterly submission is due on the 7th of August 2026. If you have not started this process yet, you need to move today, not next week. Today. Let me talk about who exactly is in scope, because this is where a lot of confusion exists. The threshold is qualifying income, and qualifying income means gross income from self-employment and property combined before expenses. If your rental income alone is £55,000 a year, you are in scope. If your self-employment income is £30,000 and your rental income is £25,000, those combine to £55,000, you are in scope. It does not matter that your rental income alone is below the threshold. It is the combined total that counts. Income from employment, your pay salary if you have a day job, does not count toward this threshold. Neither does income from dividends, savings interest, or income held within a limited company. MTD for income tax applies specifically to unincorporated income, income you receive personally from self-employment or from property outside of a company structure. If all your rental income flows through a limited company, you are not currently in scope for this phase of MTD. This brings up a point that many landlords have already thought about when considering whether to incorporate their portfolio. Running property through a limited company has already been attractive because of how Section 24 tax rules affect individual landlords. And now, the MTD quarterly reporting requirement adds another consideration. If you are on the borderline of the £50,000 threshold, it is worth having a proper conversation with a tax professional about your structure, not just for MTD, but for your overall tax position. Now, who is coming next? Because if you are watching this and your income is currently below £50,000, do not switch off, because this is coming for you too. From the 6th of April 2027, MTD extends to everyone with qualifying income above £30,000. That captures nearly 1 million more sole traders and landlords. From April 2028, the threshold drops again to £20,000. At that point, the vast majority of landlords and self-employed people in the UK will be inside the MTD system. The government has made clear that the direction of travel is toward full digitization of income tax reporting. MTD is not a pilot. It is the new permanent reality. Let me talk about the software piece of this, because for many people, especially those who have been managing their finances with spreadsheets and paper records for years, this is the most anxiety-inducing part of the change. HMRC requires you to use compatible software that can record your income and expenses digitally and submit quarterly updates directly to HMRC systems. You cannot use a spreadsheet and then manually type the figures into a government portal. The submission has to flow directly from HMRC-recognized software. The good news is that there are many options available at different price points. Full accounting packages like QuickBooks, Xero, FreeAgent, and Sage all offer MTD-compatible versions. For landlords with simpler affairs, there are more affordable dedicated landlord software tools. HMRC also maintains a list of approved software on their website. That is your starting point. If you currently work with an accountant or bookkeeper, they will already have or will be setting up an agent services account to manage MTD submissions on your behalf. Check in with them now to confirm they are set up and that your records are being migrated to a compatible system. One thing worth knowing: some software allows you to use calendar quarter periods instead of the standard April to April periods. This means your quarterly updates end on the last day of each calendar month, June 30th, September 30th, December 31st, and March 31st, rather than the 5th of each month. If you find it easier to align your record keeping to calendar months, look for software that offers this option and configure it before your first update is due. Let me talk about something that almost nobody is discussing when they cover making tax digital. And I think it is actually the most important mindset shift the system is designed to create. The current self-assessment system encourages what I would call panic accounting. You spend 11 months of the year doing very little record keeping. Then in January, you scramble to find receipts from last April. Try to remember what that payment was for. Call your accountant in a panic and somehow get a return filed just before the midnight deadline. Sound familiar? MTD forces you out of that pattern permanently. When you are submitting every quarter, you have to know your numbers. You have to be keeping clean, up-to-date digital records all the time. And here is the thing that no penalty notice can communicate as effectively as a quarterly submission deadline. When you know your numbers in real time, you make better decisions. You spot a problem with your cash flow before it becomes a crisis. You see exactly how profitable your rental property or business is right now, not in retrospect 11 months later. You can plan your tax payments more accurately and avoid nasty surprises. HMRC's stated goal with MTD is to reduce errors in the tax system, and the data from the MTD for VAT rollout supports this. Errors in VAT submissions have declined since businesses moved to digital records. The same logic applies to income tax. Quarterly digital records are simply more accurate than annual manual ones. And for landlords managing multiple properties, having a clear real-time picture of income and expenses for each one is genuinely useful beyond just compliance. Let me spend a moment on the practical steps you need to take, laid out in the simplest possible sequence, because I know some of you are watching this and thinking, right, I understand what it is, but what do I actually do next? Step 1. Check whether you are in scope right now. Look at your 2024 to 2025 self-assessment return. What was your total qualifying income from self-employment and property combined? If it was above £50,000, you needed to register for MTD by the 1st of April 2026. If it was between £30,000 and £50,000, your mandatory start date is April 2027. If it was between £20,000 and £30,000, it is April 2028. Step 2. Choose your software. Go to the HMRC website and look at the list of MTD-compatible software. Speak to your accountant if you have one. Choose a tool that fits your situation, whether that is a full accounting package or a simpler landlord-specific solution. Do not delay this step. You need to be using compatible software to make your first quarterly submission. Step 3. Migrate your records. Start keeping all your income and expense records digitally in your chosen software from the 6th of April 2026 if you are in the first wave. Every rental payment received, every repair bill paid, every insurance premium, every letting agent fee, it all needs to be recorded digitally in real time from that point forward. Step 4. Set your calendar reminders. The quarterly deadlines are the 7th of August, the 7th of November, the 7th of February, and the 7th of May. Write them down. Put them in your phone. Set a reminder 2 weeks before each one so you have time to review your records before submitting. Step 5. If you have not already done so, register for MTD through the HMRC online portal using your existing self-assessment login. If you have an accountant, ask them to do this on your behalf through their agent services account. If you are in the first wave and have not yet registered, do this immediately. And step 6, do not try to navigate this alone if you find it overwhelming. An accountant or tax advisor who understands MTD can take this entire burden off your plate. They can manage your quarterly submissions, ensure your software is correctly configured, and give you real-time visibility of your tax position throughout the year. The cost of professional help is almost always less than the cost of getting it wrong. I want to address something directly, because I know there will be people watching this who are thinking, I have been doing my taxes myself for 20 years. I do not need an accountant. I will figure this out. And maybe you will. But the transition to MTD is a genuine change in complexity and frequency. The risk of making a mistake in quarterly digital submissions, particularly if you are configuring software for the first time, is real. And the consequence of getting it wrong is not just a fine. It is a fine plus the time and cost of fixing the error plus potential back and forth with HMRC. A qualified accountant or tax professional pays for themselves in peace of mind alone. At NestPath UK, we are always honest about the things that require professional help. Building your life in the UK, whether as a landlord, a business owner, or a self-employed professional, involves navigating complex systems. Tax is one of the most complex. Get the right support. Let me also address the people watching who are on the threshold, earning somewhere close to £50,000 combined from property and self-employment. If your income is £48,000 this year, you are not currently in scope. But if rents rise, and they are rising across the UK, and your rental income grows by a few %, you could cross the threshold. Keep a close eye on your qualifying income every tax year. The year your income crosses the relevant threshold is the year your MTD obligation begins. The UK tax system is changing. It has been changing for years, and making tax digital is one of the most significant shifts in a generation. But here is the perspective I want to leave you with. This change, though it requires effort to adapt to, ultimately puts you in a better position as a landlord or self-employed professional. Real-time financial records, clearer tax visibility, fewer January panics, a more professional approach to your finances that serves you beyond just compliance. The people who are going to struggle are the ones who ignore this until the last possible moment. The people who are going to thrive are the ones who adapt now, who get the software in place, the records organized, the professional support arranged, and move forward with confidence. That is what we are here for at NestPath UK. Taking the complex systems of UK life, tax, housing, immigration, finance, and making them understandable and actionable for you. If this video helped you today, please give it a thumbs up. It helps this channel reach more landlords and self-employed people who need this information right now. Subscribe to NestPath UK if you have not already. We cover everything that matters for building a successful life and a smart financial future in the UK. Every week, real information, real clarity. And drop your question in the comments. Are you a landlord already dealing with MTD? A self-employed professional trying to figure out if you are in scope? Or someone approaching the threshold who wants to understand what is coming? Leave it below. I read every single comment, and your question could be the next video. Thank you so much for watching. Stay on top of your finances, and I will see you in the next one.